Hello and welcome to this special podcast brought to you from the BVCA, the British Private Equity and Venture Capital Association. The BVCA has been in existence for nearly 40 years, representing an industry that's focused on investing in growth firms that bring innovation, bring growth, and add value to people. And by people, I mean talent, skills, and also savers that might find their pensions and other investments within private equity and venture capital. That kind of segues to a topic that we're going to discuss today, which is what does private capital do for the UK? Fundamentally, what value does it add? How much significance does it have? And what does that mean as a knock-on effect for our economy and people right across the UK? And to discuss that, I'm delighted to be joined by Sara Rajeswaran, our Director of External Affairs, and by Michael Moore, our Director General. And well, welcome, Sara, first of all. Sara, you come from some of the highest levels in government and have a very acute perspective on the industry and perhaps a broad perspective too.
Yeah, I mean, what drew me to the industry really was the fact that we don't have big firms without small and medium-sized firms first. And I think what this sector does is so crucial, as we're talking about levelling up, as we're talking about growing back from the pandemic, as we're talking about dealing with potentially another recession. We need firms to grow from great ideas into successful small businesses, into growing medium-sized businesses, to internationalise and then hopefully to IPO here in the UK. And that's really what this sector is focused on, and that's what drew me to the BVCA and what I'm really excited about.
Michael, what drew you to the BVCA?
I spent a long time in politics, but also in the advisory world as well, working at PwC. And I was struck when I dealt with private equity and venture capital clients that, to Sara's point, they were focused on all the really interesting areas of the economy, really focused on growth, really focused on innovation, focused on internationalization. And I felt strongly that if we were to address some really deep-seated problems in the country that, as a politician, I and others debated for a very long time and still they debate today, then the economy has got to grow. We've got to, as Sara was saying, bring the small businesses through to being big, successful international ones. And our industry plays a core part in that. It does that in the context of sometimes some swirling opinions about it, but we're all very excited to be out there making the case.
And just on those swirling opinions that you mentioned, where do those opinions arise and around what type of events?
Do you know what? It's hard to be too critical about the negative perceptions, because I think we also have to think about why those negative perceptions have come about. There's two things in my mind. One is, I think the media and some of our stakeholders are very quick to pick out negative examples. But if we're being really honest, those negative examples are the minority, and they also exist in private and public markets. And that's why the BVCA exists, to be able to make that case. And the second point is linked to that, which is no one will ever hear the point about our sector unless we say it. And for a period of time, if we're fair, we haven't been saying enough. And therefore, there's been a vacuum where people have pulled out those negative examples and they've taken it as a rule, and that's all anyone's heard. But when you dig below the surface, actually, I think you find that for those that are willing to listen, which is the majority of our stakeholders, they want to hear the other example. They want to know what the positives are to balance out some of the negatives they might have heard. And that's what we're really focused on right now.
I think that what Sara and our colleagues looking at public affairs, what we say to politicians, what we say to civil servants, engaging with them at a wholly new level, all of that is hugely important. We're leaning into the arguments now rather than running away from them. And that's important because if we want to ensure that we earn the license to operate that we have, whether that's the regulatory framework, the tax framework, whatever it might be, we've got to show that we generate public value that is worthy of that license. And unless we explain ourselves really well, that's not going to happen. The really impressive thing about the industry over the last 30, 40 years, as you were saying at the outset, is the speed at which it's grown. And we are in the mainstream of the economy now. And to tell the story of the fact that we're in the mainstream, we recently commissioned our report with EY, which I know we're going to be discussing.
So we talked about stories that people might hear, and it's the same in any industry, it's the same in any walk of life, that you might hear some negative stories and that might inform your view of a particular industry or a particular area. But what is important is to get behind those stories and look at the underlying facts, which brings us to the report that you just mentioned, Michael. But taking a step back before we get to the report, if you can explain from our perspective, why is it important to set out those facts and what kinds of facts do we want to address in order to make sure that the true story of the industry is put across and understood?
Sure. I mean, as Michael said, the industry has grown incredibly quickly over the last 30, 40 years and is now a mainstream part of the economy. But I think it has been hard to quantify that for people. The examples that people will hear about are some of the major public to private transactions that will hit the front pages of the newspapers. But it's been hard to describe just how much of the UK economy, how many jobs, what percentage of GDP is supported by private equity and venture capital, and actually how that translates into some of the smaller, more exciting, perhaps, burgeoning growth companies across the entirety of the UK and all the nations and regions of the UK. And so the BVCA itself has a huge data repository that we get from commercially confidential information from our members, which we use to create our own reports on investment activity and performance throughout the year. And all of that is incredibly valuable and is some of the USP that the BVCA provides for our members. But we were also interested in seeing what a third party would make of the data. And so we commissioned EY through their Quest practice, which for the technically minded amongst us stands for Quantitative Economics and Statistics, the smart people, obviously. And they looked at publicly available data, and they did the first study of the industry's contribution to the whole UK economy. And this is the first, most comprehensive report of its kind. And it provides a snapshot of the economic activity supported by private equity and venture capital, not just BVCA members, but the whole environment as measured by employment, employee earnings, and gross domestic product. And this data in the report is broken down, as I said, by all the nations and regions in the UK and different sectors. So you can really drill down into what this means for things that matter to you.
So we've got facts now from a third party with a rigorous methodology, a rigorous data exercise. What does it tell us?
Well, the headlines are that nearly 2 million jobs in the UK are backed by venture capital and private equity businesses. That is a huge chunk of the employment market in the UK, 6% in total. We are responsible for 5% of the economic output. All the economic production of the country in a year, we're 5% of that. And that is a pretty important part. And this is to our argument that this is part of the mainstream. And as Sara was saying, this is done across the UK. Sometimes the industry is seen as being very biased towards London and the South East, and it's surely a very big part of it is based here, as is the whole economy. But over half of the jobs that we're talking about in this report are outside London and the South East. It genuinely spread across the whole country, and that is growing. That's really encouraging for us to see, because people from outside the industry, when they look at us, they see individual deals that they hear about. You know, a supermarket gets purchased by a private equity business, a defence provider is bought by private equity, but they also see a breakthrough technology that comes to through a company to float on the London Stock Exchange. They don't necessarily join the dots between all of these, plus countless other unsung heroes across the country that are producing hundreds of jobs in what in our jargon we talk about SME, so small and medium-sized enterprises, anything from 50 employees to 250. They're all over the country. And this report now brings all that to one place. And it's very exciting to have it, to talk to politicians and civil servants and others, and ask them to work with us to see what we can do to encourage more.
And just on that point, so if with these facts we're establishing that the industry is prevalent significantly across the UK. You could go as far as saying that there's some form of backbone in many respects to the UK as a country, and perhaps specifically when you're engaging with government. What can we do with that knowledge?
If I go back to the old days of being either a government minister or a politician in Parliament and grappling with the issues, what mattered to my constituents or to the people that I was answerable to as a minister, they wanted to know how you're going to get the economy to grow. Now, recently, we've seen with the pandemic a massive, massive disruption. People really, really in trouble, uncertain about the future. And the great thing is, beyond the EY report, we've got the evidence that Sarah's been talking about and the examples of businesses that I think it was over 50% of the companies in which we're invested received extra investment during the pandemic. So checks were written, people were sitting around the table actively engaged in running these businesses. And that's a critical thing that we are seeking to explain more of. It's not just about writing a check and going away and saying, how are you doing against the business plan, guys? It's actually sitting around the board table, bringing in the expertise, sanctioning the investment in new systems, on new platforms, getting into new markets, which some that were on the public markets didn't have the breathing space to do, or some that were small didn't have the ambition to achieve. So we've got these people who were investing through the downturn. They're still doing it now, and they're helping to underpin the growth of the country. We've got a whole national and regional dimension. The Conservatives would call it levelling up. Labour, Lib Dems, the Greens, everybody else would have a different version of it. But everyone wants to see opportunity in all parts of the country. Our investment stories, as well as investment data, highlights the fact we are in every part of the country. Sarah and I were in Redcar a few weeks ago, and we were on the site of the former, I think it was ICI Chemicals Works there, in its time, a great industrial complex. Now, the site of a number of small startup businesses, one of them, Nova Pangea, investing in sustainable aviation fuels, amongst other products. And they are backed by a number of our members over time. They are growing, and they are not only doing it outside London, but they're tackling the green agenda, which is another area where we can support what people are worried about. And they're just making sure that we are on all the key public policy issues of the day. So the green agenda, just to finish on this, our venture members and some of our private equity members are really focused on finding the technologies, the new ways of doing things that address climate change. So Nova Pangea, an example of that. So we're advancing solutions to the big issues of the day. And then we're also adapting the existing portfolios. So one of our members owns a go-kart franchise across the whole of the UK. They're switching out the petrol engines and putting electric motors in instead. Because they know, A, it's the right thing to do, and B, as things are going, if you want to add value to a business, there's no point in investing in things that will be deeply unfashionable or, frankly, not allowed in a few years' time.
No, absolutely. And it's really interesting to delve into the details of what our members are investing in. It's not just the green agenda, it's all the major policy issues which are facing not just our country, but, the world at large. So earlier this month, I was talking to a Labour politician about a business in her constituency, which is providing pooled benefits for people working in the gig economy, which, when you think about today, some of the big ESG issues, but you take the E out of it and you look at S&G, which is often, unfortunately, a bit sort of ignored at times. This is a company that's actively looking at how to make the world of work, which is rapidly changing, fairer. And that's being backed by our members. And that's the sort of company that we want to see grow and thrive in the UK, because there's another agenda out there, which the government calls it the science superpower, but, every party is interested in making sure that the UK is a successful place to grow, but also keep businesses, because we all know that one of the great things that we have here in the UK is ideas. And our members are helping to take those ideas and to grow them into big, successful UK companies. And if you follow the ecosystem from VC to growth to PE, you can actually keep those businesses here in the UK without them having to be sold to, a big Silicon Valley tech giant.
And speaking of following the ecosystem, so we started off this discussion talking about grappling with the facts and figures that point to the industry's contribution to the UK. And we've segued to talking about the role that the industry plays in the UK when it comes to sustainability. Above and beyond, we've gone beyond jobs, we've gone beyond the economic contribution. For those that want to follow the industry, what are the useful things to look out for as the BVCA continues its work when it comes to just knowing, okay, but jobs, but what kinds of jobs, in what kinds of businesses? Sustainability, great, but how am I going to learn more about the sustainability contribution, for example? What might someone look out for in the coming months and years?
Well, the EY report, as I guess we'd all expect me to plug, is a really good source of that. And we will be following up the original overarching report with a series of dives into the different national and regional pictures that it emerges. And echoing a thing we did, I mentioned our visit to Redcar recently, we based it around one particular company, but the story we were telling was actually that there's £500 million worth of investment in Yorkshire and the North East in 2020. Now that was actually the year of the pandemic's biggest impact in terms of the shutting up of activity and everything else. It was a huge amount that was being invested in that particular part of the country. So we'll continue to provide the information that any stakeholder, anybody who's just interested in what this industry is about, tell the story from their local perspective. And to the point we've all been discussing, make sure that the good stories are coming out there, because it's not been one of our strengths historically as an industry, and for us as the BVCA, candidly, we've probably not felt it was as necessary as it clearly now is, but we're very proud of the stories there are. So there'll be more of those, and I guess referring people to our website is not the most exciting thing to be offering them, but we will be much more visibly telling those stories, not least because we're confident in the strength of the story we're telling, but also our industry is much more in the public domain than it once was. We've had big supermarkets become privately owned. We've had, as I mentioned before, big defence companies likewise. But there are some great household brands that were in difficult places or not as well developed as they could be. Maybe take Dr. Martens as an example of that, where through long-term private equity, insight, capital and ownership, they have developed into a wholly different place. These are great success stories. We'll be telling more of them.
Absolutely. And it kind of depends who you are that's listening to this podcast. If you're a politician or a political stakeholder of any form, we have, through this report with EY, data on companies in individual constituencies, and we're doing a big program of talking to politicians and taking them to these sites, because there's nothing more valuable to us than hearing it from the mouth of the CEO of that company, why private equity or venture capital investment and expertise was critical to their growth. If you're a member firm that's listening, do get in touch if you've got a great case study, because we're using them in all of our forthcoming reports, in our social output and in our face-to-face engagement. And if you're a journalist, potentially you haven't heard from the BVCA as much as you could have in the past, but that's very much what we're changing. And we have lots and lots of data here. We have lots and lots of expertise, and we're always willing to have a conversation.
We looked hard in the last year at how we describe the industry, how we tell its story, how we engage. And to the points you were making right at the start, Leon, accept that there are questions asked of us, and sometimes we've not been able to give the best of answers because, like there are in all walks of life, and in whether it's the private markets or the public markets, there are a range of behaviours and sometimes success and sometimes failure. But what we're now doing is making sure we're equipped to tell the story better. And the tagline that we're talking about the industry now is that we're invested in a better future. We don't mean just literally the money that is put into these businesses. It's actually about that sense of shared commitment. We're looking to the future, looking for better outcomes. We're looking to generate public value, not just about, but it's important, the economic value the EY report is really strong at telling, but on matters of the environment, social and governance metrics, the ESG that we talk about in the jargon, that we're good public citizens, and where we need to improve, acknowledging that we're on a journey to do that. All of that really, really matters to us. So there'll be a lot more of that. But to where you started, we're about growth in the economy generally, looking at innovation and people. And it's one of the great things about our industry. It's about thinking about how important people are to the success of it and how important people are to what we do in it and what we do on their behalf. So we're clear where the focus should be.
You've mentioned this word public a couple of times, and we've talked about the contribution to the UK, so jobs, GDP, but we've gone beyond that, and in terms of innovation and people, with public having some significance there. And the name of this industry is very much, private equity and venture capital, private capital. Is that word private almost becoming, it's a descriptor of the industry, but almost an irrelevance as this industry becomes actually much more mainstream?
I think the distinction between private capital and public markets remains highly valid. But what it's not any valid to say any longer is that the privacy is secrecy. But again, it's a good example where there are questions raised about the openness and the transparency of what the industry does. But ever since the tail end of the 2006, 2007, just around the time of the financial crisis, the industry has been much more aware of the need to be open. We have, for those who follow us closely, what are called the Walker Guidelines, the private equity reporting group. An independent body keeps them fresh, and they are basically ensuring that what we put into the public domain, what we report for the companies we've taken private, is at least as good as it would have been had they remained on the public markets. That transparency is quite complex. Candidly, we've not been great at telling the story or turning it into stories that resonate with people, so they think it's a bit mysterious, they think it's a little bit too secretive. One of our projects for the year is to tell those stories better, and so that the privacy, secrecy bit of the industry is much less marked, and we can show whether it's questions coming from journalists or concerns coming from politicians. We are engaged on the issues that matter, and we disclose our performance on a wide range of things, not just how the profit and loss account works in any given year.
And I think, just to add to that point, companies in public and private markets are facing the same social pressure to be clearer, to be more transparent, and to be more open. And I don't think that that's a bad thing at all. And I don't think our members see that as a bad thing either. We are very, very keen to view and to understand the societal pressure and to react to it. And so that's part of, why we're refreshing the Walker Guidelines, but also the fact that we as private capital industry will abide by all the relevant legislation and measures coming down from Europe through the TCFD measures on ESG, which sounds like a huge amount of alphabet soup, but it's basically being clearer on your sustainability measures, but also the changes coming in from the UK government on corporate governance in the future. We have to be very clear that, as Michael said, privacy is not secrecy. It's just a way of owning a company. You can own it in the private markets or you can own it in the public markets, but there's no smoke and mirrors. And it's our job as the BVCA to be clear about that and to make sure that our stakeholders understand.
Absolutely. Thank you, Sara. And with an industry that has such a significant impact on the UK, as we've heard today, then secrecy just doesn't help at all. And quite the opposite. It is beneficial to those that invest and work with those businesses and people to be much more open when it comes to development of businesses and people too. So I hope this has been useful to you that are listening. If you have any questions for us, then do drop us a line. We're very open to engaging, eager to speak, and would love the opportunity to chat with you further about this contribution that both private equity and venture capital make to the UK. Thank you.